Gautam Shah is with us, founder at Goldilocks Global Research. Gautam, great to have you with us here on the program. Thanks very much for your time. So 25,116 basically was the top end of that range that we were looking at, and the market, was had been in that range for a while, sort of broken out. But the argument is still on whether it is convincing enough, and there is enough in the tank for the market to make new highs on the Nifty. What's your sense? Has the road cleared up in that sense?
Good morning, Prashant. Well, yes, I think this 25,100 area has actually become quite popular. And I think a lot of people who track the Nifty and the large caps have become quite restless, in fact, even frustrated, because the headline indices have really gone nowhere in the last 3.5 weeks, whereas the broader markets have been in tear-away mode. This is classical bull market characteristics where you see market cap rotation, and I think this is going to continue going forward. As a technician, I always look for overbought signs or topping signs. I don't see any of that right now. I think the market remains structurally strong. We've obviously digested a lot of news flow in the recent past. The momentum is great. And you have the broader market indices a few percentage points away from lifetime highs. So given all of this, I don't think the Nifty can stay in its slumber for too long. 25,200 is actually now the working number that we are watching. And once that number is taken out on a closing basis, I wouldn't be surprised if the Nifty starts marching towards that level of 26,200, which is the lifetime high. So I think one stays bullish, ride the trend, do not overthink, do not overanalyze, and just participate in quality names.
Okay, Gautam, hi, morning. I missed the number. What is the close above what level that you think the march to 26,000 will start?
I think 25,200 is the important number for us now based on multiple technical studies. And once we see a good close past the same, I think we are headed towards 26,200 with a stopover at 25,600.
Okay, so basically a whole 1,000-point upside from here is what Gautam still sees is on the cards. That's good to know, because, every time we get into this prolonged consolidation, then mid-caps start falling as well, and you wonder what's happening with the market. So now you spoke about sector rotation. So give us some more clues on this, because there have been patches where the old winners like defense stocks, they've still done well. Tell us what the charts are saying there, and where do you see signs of new leadership?
Well, I think the leadership clearly emerged from the banking space. I think the Bank Nifty has seen quality consolidation in the last couple of weeks, but still seems to be super strong on the charts. I think our near-term working target is about 58,000. And for a very long time, we've been talking about 60,000 on the Bank Nifty and the entire financial services space. So the banks, the NBFCs, and the insurance companies, the housing finance companies, I think they all look good. So I think if the Nifty has to break out, banks will have to participate once again, and it will probably trigger, the breakout. So I think I would be very, very bullish on the entire financial services space. And I think this is a trend for the rest of the year. This will be followed by metals and real estate, which has been our favorite all along. I don't change my views and preferences very often. So I think real estate and metals are on top of the list for me, and I think it will do bigger things. I think we will also see some participation from the IT space, which has seen some uptick in the last couple of days. So that's always welcome. But I don't think the IT index is going to be a big outperformer. And with Reliance having lost its underperformance, which is good news for the market, because even that stock could be gradually moving towards 1530. But the real opportunity is mid caps and small cap. Broader market is the opportunity, not now, but I think for the rest of the year. So forget the headline indices and focus on the broader markets.
All right. Hi, Gautam. I wanted to just come to that itself, because that's what makes portfolio looks good, right? The headline index could consolidate a little bit, but broader markets have been doing a thing of their own. Tell us any kind of levels you're looking at in both the indices, the small or the mid-cap index.
Well, it's quite incredible that the broader markets witnessed a bear market for about 6 months, and the average decline in the overall market was about 40%. So we actually came out of that kind of damage. And today, we are a few percentage points away from lifetime highs on the broader market indices. So I think the mid-cap 100 index, our working target is about 61,000, which was the previous stop. It could take a bit of a breather there, but once that number is taken out, I think a 65,000 is easily doable. If you look at the small cap 100 index, that's also setting up beautifully. In fact, the last 10 days, you are seeing a higher high every day on these indices, while the Nifty has been absolutely range bound. So I think that says a lot. But I think on the small cap index, our working target is about 21,000. So that's good 10% upside even from here. And I think you are seeing a relay of sector rotation even in broader markets. I mean, there are various pockets of the market doing well on a regular basis. We saw capital goods come back. Infra has done well. Sugar and paper have started to come back really well. So I think this is a good place to be in. And I think with US markets very, very strong, it just helps India do its own thing.
Yeah, I actually was just coming to that. The fact that globally as well, markets have just gone on, unfazed, right? Tariff issues, wars, falling bombs, drones. Markets have just continued to march higher. Do you see, anything changing in the global setup, the dollar, or whether it's the US 10-year yield and the mother market itself? What are those charts telling you?
One clear learning from the last 5 years is that the best opportunities are in the most difficult times. I think we saw that in the COVID period, and we saw that a couple of months back when we had the geopolitical scenario and people thought that that's going to derail equity markets. Did not happen, and I think markets beautifully held on to support levels. If you look at the US markets, they've also seen a beautiful V-shaped recovery in the recent past. The S&P is at the doors of 6150, which I think will be tested and probably will also get crossed. And I think many of the top stocks there continue to be quite solid. And in fact, even the Russell 2000, which is the broader market in the US market space, also seems to be doing well. So with the mother market quite safe, Europe in top form, Asia doing relatively well, and India having its own positives, and the fact that we are still 4 weeks away from the next earnings season, I don't see anything on the horizon that can really derail this market. So pausing and going up is good. I think every bull market has this beautiful framework of run, pause, and run.
And what about oil? That's a sudden surprise. $70, and the Americans are moving some of their personnel out of the Middle East, and suddenly everyone's looking at Iran. I don't know. Are the charts indicating anything ominous on oil?
Not really. I think it's seen a bit of an uptake, but we remain neutral to negative on oil. I think $63 to $75 is where oil is going to stay. And actually, as a technician, I'm very happy if oil stays range. So I don't want it to go up too much. I don't want it to go down too much. And I think it's going to remain this way. But I think the point that I highlighted in our last interaction, that the real opportunity is in the precious metals. While gold is taking a bit of a breather, look at what silver has done in the last 10 days. That's been our high conviction idea at Goldilocks for a while now. And I think it's ready to do bigger things going forward.
No, absolutely. Tilaknagar Industries, right? I mean, that's I think the big mover. It was not there in a big way when we started, but I think it's up 6% now, 7%. The graph should come up on your screen. So 370 on Tilaknagar and is, by the way, the fourth largest volume-led gainer on the NSE. The other one, which I think has picked up pace quite a bit, is Suvain. Suvain was again, it's gone up very sharply and quickly. So 268 on Suvain, 8.5% gain. And of course, I mean, I mentioned Tilaknagar, but take a look at Radico as well, which has picked up. It started higher, but it's up another 3%. It's basically up 3% on the day so far. It's really become about. It's become very disaggregated, Gautam. You'd agree, right? It's about individual stocks here, there, because the pickings are slim, so to speak. From a fundamental perspective, I don't know maybe how you look at it, how you look at things technically, but except defense, where there perhaps is a big tailwind, a broad tailwind, right, where you could sort of work to build, buy a bunch of them and kind of hold on. Otherwise, it's very disaggregated. Would you agree with that? And if yes, run us through some individual setups that you really like in the market, broader markets.
Well, absolutely. I think it's a stock pickers market. I think that's something that I've maintained for the last couple of months, because even if the Nifty does well and moves to lifetime highs, it's a 4% move. So it's actually nothing special. And with FD rates, on the downhill, it's very clear that more and more money is going to come into the equity markets going forward, given the stability and the strength of the recent past. So I think a stock pickers market is actually a good place to be in. Sadly enough, grade C and grade D have also done well in the last 2 weeks, which is a bit of a concern for me. But at Goldilocks, we only look at super solid companies fundamentally and technically. And I think the entire infra space looks very interesting to me, because if you have to play the India story, you can't let go of infrastructure and power. So I think these are two pockets that we like, and the top 4 or 5 names in both of these sectors look very good to us. I think they could generate 25 to 30% upside over the next 6 to 12 months. So that's something that we are focusing on in the broader markets.
And just to round the conversation up, what we started with, what about defense? I mean, does it still have some steam, or do you think there are some signs of fatigue or topping out here on these charts?
I think there are very clear signs of fatigue. In fact, I will want to believe that there is a greater fool's theory that seems to be playing out there. Anything and everything seems to be justified. And I think this has to end at some point of time. I'm not saying tomorrow, but I think these are not levels where you can make serious commitments in defense. I agree it's a great story for the next 5 years, but for investors, there are some amazing opportunities across the board. So why commit into defense? In fact, the entire PSU basket, the PSU banking basket, we like. I think that's a theme that's going to play out beautifully. Valuations are comfortable, charts are great. They're all coming out of 3 months of consolidation. So I would definitely recommend investors to look at PSU stocks seriously.
Yeah, no, absolutely. And PSUs, PSU banks, but not limited to defense, as Gautam said, perhaps is a way to go at this point. Sterlite Tech, 14% pop now. Reddington is coming up with about a 5.5% gain. Ajanta Pharma is up about 3.5%. HOEC is up about 2%. So lots of new names in addition to what we've been sort of highlighting earlier as well. Thanks very much, Gautam, for joining us. It's a pleasure and always good to listen to you. Thank you.